This is an Uncovered Japan Company research report on LightUp, ticker 6580. LightUp is a Tokyo microcap that uses government subsidy support to meet small businesses, then cross-sells AI training, software, development, and BPO. The opportunity is unusually specific. So are the execution risks. As of the report's 10 June 2026 source date, LightUp traded around 753 yen, or roughly 4.4 billion yen of market value. That was 8 times forward earnings and 1.17 times book value. The balance sheet is the safety anchor. Net cash was about 528 yen per share. The equity ratio was 86.9%, and the company had no interest-bearing debt. The best way to understand LightUp is as a funnel. It helps small companies navigate subsidies and grants, making the initial contact inexpensive and useful. That contact feeds a database of roughly 130,000 firms. From there, LightUp can offer management support, AI training, AI packages, SaaS, development, and managed operations. The durable asset is this distribution and needs detection engine, rather than proprietary AI technology. 3 features make the funnel hard to copy. Customer access comes through subsidy support, municipal and regional bank relationships, and a Change Holdings alliance. The 130,000 company database improves targeting. And around 300 external development partners keep implementation flexible. But this is not a classic software lock-in. A subsidy customer is not automatically a recurring customer. So the moat is strongest at acquisition, not retention. The reported segments are highly lopsided. In fiscal 2026, AI solutions generated 3.23 billion yen of sales, 92% of the total, at a 21.9% operating margin. The older content business accounted for the remaining 8%. AI services have overtaken the legacy J-series in revenue, but the legacy line declined enough to outweigh that growth. The question is volume and conversion, not the segment's underlying margin structure. The income statement is the reason the shares are cheap. Over the 5 fiscal years through fiscal 2026, revenue ranged from 2.2 billion yen to 4.0 billion yen, and operating margin swung from 6% to 30%. Fiscal 2026 revenue fell 11.9% to 3.53 billion yen, and operating profit fell 34.8% to 469 million yen. The 84.4% gross margin remains structurally strong. The instability lies below gross profit. The balance sheet does not eliminate business risk, but it does materially reduce solvency risk. At fiscal 2026 year-end, cash and deposits were 2.58 billion yen, or 68% of total assets, with no interest-bearing debt. Free cash flow did slip slightly negative, about 50 million yen, as taxes, lower contract liabilities, and investment spending weighed on cash. Investors should watch for recurring revenue evidence, rather than assume the cash pile solves execution. Management's strategy reduces to a single objective: turn one-off consulting into recurring revenue. Its 5 AI pillars run from training and packages to SaaS, BPO, and development support. The 4th pillar, AI operations and BPO, matters most because monthly contracts can stack instead of resetting after a project. J-Console's conversion to subscription is an early sign, but the evidence to watch is AI domain order value and whether contract liabilities recover. LightUp's PE history needs careful reading because the denominator moves wildly. The report places the current forward PE at 7.98 times, near a 10-year low. In weak earnings periods, the multiple has looked high because EPS collapsed, not because the market was exuberant. The discount reflects repeated guidance misses and lumpy profits. A re-rating requires evidence that earnings have become steadier, not merely a low headline multiple. Against adjacent Japanese SaaS and SME support businesses, LightUp is the low PE point on the chart. But it is also a lower return business, with fiscal 2026 ROE of 8.1%, compared with substantially stronger returns at some peers. That makes this a conditional value case. The relevant question is whether a cash-rich business can convert its cheap acquisition funnel into recurring, reliable returns. The report's 3-year scenarios make the uncertainty explicit, rather than hiding it. The author's bear, base, and bull cases run from 390 yen to 2,860 yen, versus the 753 yen source date price. The base case assumes only partial guidance delivery, modest revenue growth, and a 15% operating margin. It is analysis, not a price target or recommendation. The distance between cases is the key message. This is a high-variance microcap. LightUp has a distinctive subsidy-to-AI funnel, a 130,000 company database, strong gross margins, and more cash than many microcaps can dream of. But the market's skepticism is grounded in volatile earnings, optimistic guidance, and an unproven recurring revenue transition. The scorecard is straightforward. Watch AI BPO conversion, AI order value, contract liabilities, and guidance delivery. For the full research, use the linked Uncovered Japan Deep Dive. For a much deeper look, visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.